USD has been getting absolutely slammed today, guys. Dixie, the dollar index, trading around about that 99 level at the moment. And you got to think, for most of last week, we were trading well above 100. So what has changed? Why is dollar getting slammed so much this week? Well, to be honest, today's move doesn't really have a piece of news that you can point at and say, yes, this news happened, and then dollar fell after that piece of news. What we're seeing in the market today is more a continuation of current market themes, playing themselves out in moves in the market. The market is, gradually responding to these changes in geopolitics and macroeconomics and all that kind of stuff. So one of the big things that's happened this week, and we have reported on this in an earlier blog, is this German-French proposal for the EU Recovery Fund. Now this is a big step for the EU, to propose joint EU debt. For many analysts, they see, joint EU debt as a big step towards fiscal union in the EU. And a lot of people think that without fiscal union, the EU is kind of destined to fail, because without fiscal union, you're going to get more debt crises in places like Italy and Greece and Spain and other more vulnerable economies like that. And these debt crises obviously threaten the existence of the euro, because if a country is in a debt crisis, they're going to leave the euro. So anyway, this French and German proposal has been seen as a big plus for sentiment, and it's been a big boost to the euro. And the euro is the USD's biggest trade-weighted trading partner. So when the euro goes up, typically USD comes down. It can't be both. It's almost like two big planets pulling on each other. When one moves one way, the other one gets dragged, and when it moves back, it's kind of like that. What are the other things weighing on the dollar then? So generally speaking, it's not just this European Union stuff, it's also market sentiment in general this week has been very, very constructive. So obviously we had all these hopes regarding this vaccine from Moderna, but more generally, since the March lows that we saw on global equity markets, we've had a very, very good recovery. NASDAQ, the tech index in the US, is actually nearly at all-time highs, which is insane when you think about the fact that the world is in lockdown. And a lot of people basically, the reason for good sentiment in the market at the moment is the fact that fiscal authorities, so governments, and central banks, monetary policy, has responded very aggressively and quickly to this coronavirus crisis, which in other crises, authorities haven't done, which has kind of made the crisis worse from a financial market perspective anyway. That is why we're seeing this ongoing, just gradual improvement in sentiment. Also seeing economies reopen, so it's almost like the worst is behind us in terms of the spread of the virus. Obviously that remains to be seen. The final thing weighing on the dollar, and this kind of links to the last thing I was just saying, is the Fed. I was just talking about all these central banks easing, which they have been doing aggressively all over the world, but nobody has been doing this more so than the Fed. Because think about it, all we have to do is look at the growth of the Fed's balance sheet as a percentage of GDP. The stimulus that the Fed has been doing far outstrips anybody else. It outstrips the ECB, the BOE, the BOJ. It outstrips all of them, and that has been weighing on the dollar. Fed Chair Powell says they're going to keep doing more, so that's going to continue weighing on the dollar. So that is what I think is weighing on the dollar today, guys. That is pretty much it from me for now, and I'll see you in the next one.